Hi, this is Paul from globaltradingsoftware.com, and this is an Elliott Wave trading tutorial for swing trading stocks. Now, a lot of people just presume that Elliott Wave and swing trading is just for long trades, but it's actually for short trades as well, especially when we've had a big move out of a longer term trend like we have on BMY here. This is on the daily time frame. One of the first things before you even look at Elliott Wave or potential shorts is to look at the support and resistance zones and look at the channel. Put a channel in where it's broken out of with a parabolic move here. So we look at BMY. We take this back to May 2020. This current bullish move really respected the channel very well, but we've broken out of that channel now, so we're out of that sort of non-linear sort of trend channel, if you like. We have some major support and resistance zones here. One of the ones that tips on the edge of the channel, just here where my cursor is very important. This is where we are right now price wise. We look left on here, it's been tested as resistance as well. Support here, a lot of clustering here, so big support and resistance zone. We've got one below, support here, support where the channel, bottom of the channel is as well, very strong support and resistance zone there. And then we have another one down at the bottom again, bottom end of the channel is touched, as so we've got linear and non-linear support and resistance there. So put those on my chart. Let's talk through this potential trade here, what we're looking at. So Elliott Wave indicator suite, really we isolate the trend, so the Elliott Wave indicator suite counts at the top here. It's broken down, it's found support at a previous support and resistance zone, and it's pulled back up against what we are in now as a short-term bearish trend. Some of the things to note here, so I'm using some of the tools in the swing trading bundle as well. We've got the EMA clouds. Purple is 89 and the grey is 55. Important thing to note as well, when we're in a bullish trend you'll see the 55 above the 89. When we're in a bearish trend it is below, and we see that as a non-linear support and resistance zone. So we're going to zoom in a little bit now, and we can see we touched into that 55 EMA cloud recently on this wave 4 pullback. We also pulled back into the green zone on our Elliott Wave indicator suite, green, amber, red. So a green zone represents an 85% probability. If that resistance holds in here, then we're going to go and hit that automated fifth wave target zone. Middle of that zone is around 55 at the top end of this support and resistance zone as well. So quite freaky. But we also need to look at the behavior of this wave 4, which is very important. So ticking the box for the 55 EMA cloud, the green pullback zone, but then we look at the stochastic. We've got a false breakout dots down at the bottom here denoting a strong bearish trend. When the stochastic pulls back against there, crosses over in the overbought zone, there's a high likelihood that it wants to return to this oversold state in this these false breakout dots. So that's a good thing. The next thing is the Elliott Wave oscillator. We have on the wave 3 we've got these red histograms here. We've pulled back during the wave 4 between 90 and 140%. So this wave 4 has behaved extremely well so far. We're also looking at the bias indicator here. We were red. We've pulled back on the wave 4 to amber, so that's neutral. We could really be doing with that turning red. It's not necessary, but we could do it. Now Friday's candle was in fact a green candle, so it was an accumulation candle, so it had more volume than the previous day. It did engulf Thursday's candle as well, so we've got a good opportunity to go short here at 58.62. If that turns back around, breaks this, comes back down through this zone, the 6-4 moving average high, this red moving average is part of the Elliott Wave indicator suite, and that's our we would be below that, the red one for the shorts, so that's a good conservative entry. The stock would be above the wave 4, but what we've got to do now is wait. Does that bullish momentum continue? Do we get another test of this EMA cloud? As long as it doesn't break this 140% down on the Elliott Wave oscillator. As long as we don't get false breakouts dots on the top here in the overbought zone, this trade is still good for that entry at 58.62. Not a lot of shorts setting up right now, but this is broken out of that longer term channel. We've had a pullback against there with earnings, but it seems to have run out of juice. If that starts to turn back down again, we want to take advantage of this and get in that short. Now there is some support down here where the previous wave 3 is, and that is normal, but we're 1-to-1 for that risk reward, or 1 to 1.3 into the middle of that zone. But ultimately we're looking for this fifth wave target zone, this $55 price, and that's over 1 to 2.5, so that's really good risk to reward there. So it's about being patient now. We've done the hard work, we've put the channel on, we've identified it's broken out of that channel. Not only that, we've identified some strong support and resistance zones to help us understand the behavior, where our entry is going to be, what the risk to reward is going to be. We looked at that wave 4 behavior, and so far it's behaved very, very well. So it's just a matter of time now. If it breaks this wave 4 pivot and then turns back down again, as long as we've not broken those other rules I've talked about, the entry is still good at 58.62. We just adjust the stop. But let's wait and see. We've not got a crystal ball. We can't look right. We've looked left. We've used the Elliott Wave indicator suite, and we're ready to go short at 58.62 if it turns back around. So hopefully this helps. It's a simple strategy. You just need to understand how to frame that charts with the channels, support, resistance zones, and then just use the Elliott Wave indicator suite to measure that trend and look for those fifth wave trades.